We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Peter Grandich from Peter Grandich and Company. How are you today, Peter?
Good to be back with you, Tom.
Great to have you back, Peter. So, going through and doing some research for today, I think we need to expand a little bit upon something that you and I have touched on before. Has America entered its worst economic, political, and social era ever?
Yeah, that was my opinion in 2021, and I'm sticking to it. And, there's some things on the surface that because mainstream media here will never divulge or get involved in some of those things, or even the main so-called financial networks. But you don't have to look far past what wokeness has done to just the way that we're living, both economically, socially, and politically. Things that our parents or grandparents would be unimaginable, could not begin to think that that would be a normal way of life, is now gripped hold. And it's the same thing economically. We're seeing more and more Americans working paycheck to paycheck. We're seeing food bank lines get longer and longer. We're seeing politicians continue to be the best at spending money that they don't have. And it's very hard to not say to yourself, this is like a bottle rocket, and it's getting near the end of that pop. And, we may be off in timing, Tom, but we're not going to be off on what the outcome's going to be. They're going to kick this can one day. The Congressional Budget Office, which is about as close to bipartisan as you can get in government these days, is now calling in less than 9 years for the debt to be up at $50 trillion. Now, I'm going to tell you, Tom, I'm celebrating. I'm in my 40th year. If you told me in 1984 as a young stockbroker, I'd be saying trillion about anything debt, let alone 50 of them. Just unthinkable. Mm-hmm. But here we are. So one day, and probably in our life, certainly in your lifetime, but probably even my lifetime, they're going to go kick that can one time when they're coming down, and it's not going to move. And that's when all the, what hits the fan.
So, Peter, isn't that, though, let's say the cost of moving a society forward is constantly changing, not necessarily hanging on to those old traditions?
Well, I don't know, Tom, if it would say we're moving forward. This is the first generation now that's making left, has to live at home, doesn't have the same broad outlook as before. We're seeing tremendous amount more health issues in younger people, some of it related to the COVID and the shot and everything like that regarding all. And we're seeing some of the simplest things that families in the past took for granted. Safety, to literally can't go into town, or lawlessness. Tom, it's inconceivable to continuously turn on the news and see people walk into a store and just happily, without fear, take stuff. And then for the few people that try to stop them, the employees actually lost their jobs. It's incomparable. My dad was still alive, who died at 88. If I was telling him these things, that he would say, Peter, it can't be possibly happening, but it is. So, yeah, society does move, but society to me is moving sideways to down. We're going backwards in some of the most fundamental things to human life, even life itself. In Canada now, the government actually advocates to seniors who are struggling either health-wise or financially, that are old, to consider taking their own lives openly, not behind closed doors without anybody knowing it. And I would tell you that Canada would have been considered by me, because they've always been a neighbor to the north, one of the most modern, good places you would want to live. And so I'd have to say, Tom, no, I think there's a lot of things going backwards versus the few that are going forward.
Mm-hmm. Peter, what about some of the economic data that makes you feel like this is the worst era for America as well?
Well, I'm going to tell you this. If I ever have a business again, I'm going to get who's ever running the BLS to do my books. Because for 14 months in a row, listen, economists are bad at times. They can miss, but they don't miss 14 times in a row, because they have models that are set up on normal things. And when you're that far off all the time for 14 months, it's not your model, it's the people creating the data for the model that's wrong. So it has given a false impression to me on the strength of the economy, especially when the household survey is so much discrepancy worse off. Plus, everywhere I look, people are telling me they're getting laid off. A business is tough. They're not. I'm in a separate world. I'm in a planning business that has small to mid-sized business owners in every state, but two or three I think we don't have. And every single one of them, Tom, will tell me that it's never been tougher to be a small business owner, and is more tougher now than any other time before. And things like getting labor, keeping costs down, all these things. So the economy and what is portrayed by the mainstream media and the so-called financial news network and the real economy, I think, has a big discrepancy.
So, Peter, what do you think can be done about this?
It's tougher now, Tom. The elite, or whatever you want to call it, have more control now. They've been able to influence people, partly thanks to the internet and the mass production, and able to control the few people now. If you think about it, it's probably 4 or 5 major companies that are the avenues, provide the avenues, the content, or the ability to contact for how 80 to 90% of people are getting their news now. When there used to be, all sorts of different publications and independent stuff. So I just think it's a bigger challenge. If you need to know, completely candid, I think that the fact that how this country first operated in its first 200 years on what was known at the time as a Judeo-Christian principle, that's just lessening and lessening, and a more secular, socialist, communist style is taking over. And with that, when half of America has no belief, they're either atheist or agnostic, those of us that still have faith as an important part of their life, and what past generations even focused on more, have to get used to that those people are not going to have the same opinions in many ways that I'm going to have.
Mm-hmm. So, Peter, I'd like to move on to talking a little bit about something that I was reading in one of your blog posts that you wrote. What's an example of a crowded boat of a trade right now and an empty boat trade?
Well, the crowded boat now would be AI. I'm waiting for some junior resource company to announce that they're out of the mining business and just got involved in AI. That may be the peak, at least to the short-term run. The technology run, the rally in the market is probably the thinnest in terms of the least amount of participants to give the greatest gains. Just up to a few days ago, it was less than 11 stocks that made up 90% of the gain that has been made since the bottoms in the S&P 500. So that's a fairly crowded trade. I think the dollar had been and still is, to most part, a crowded boat. Then there's the uncrowded boat, and there's no more boat with few people, and it's been being abandoned ship in recent weeks than in some of the metals, and in particularly the mining shares, especially when you get down to the junior resource. There we're seeing capitulation and desolation.
So, Peter, why does that, let's say that the empty boat trade appeal to you more? Is it that the consensus is typically wrong? Is it because of these, let's say, traditional instruments that you believe in? Is that the reason for why you like those assets? Explain to us a little bit more about your thinking around, like I said, this crowded boat versus empty boat mentality.
So when I look back at my losses, which were many over 40 years, Tom, I think about that. One of the things was that I try to get involved in something that was already pretty well involved. And momentum plays, if you catch the middle, you're okay, but a lot of people left holding the bag. We saw that in cryptocurrencies. They like to talk about, it went up this much, but the amount of people that participated that went up this much, and then the amount of people that participated 50 or 80% higher than where it is now is so much dramatically. I guess the best way that I describe it is I've learned it's better to be a year too early than a day too late. And once we're late, once something turns down and we just got in, the emotions lock in. It's very hard to become a seller. The single biggest complaint I heard from financial advisors, from the investors about financial advisors is, hey, you guys and gals, you always tell us when to buy, you don't know when to sell. Mm-hmm. Well, one of the simplest ways I used to answer is you sell when you can no longer first buy something. And in an uncrowded boat, which would be gold right now, I could buy gold today, yesterday, and the day before because of what I still think is in front of us. So I think that's an important part. And quite frankly, a small percentage of people make the money. So contrarianism is more likely to succeed over time than a momentum player.
So, Peter, is there a particular, let's say, section of the gold, let's say, investing area that you're focused on, or that you feel is bright right now?
Well, I just wrote a report and it was called Junior Resource Stocks Goodbye or Goodbye because I'm down. I know some people don't seem to think there's other people that lose if you listen to some of the people that comment in that world, but there has not been this wide of a discrepancy between the underlying metal prices and the valuations that are being placed on these stocks. The valuations on these stocks now are similar to me than when gold was $300. And, we're still pushing 1950 or so when you and I are speaking. And that is just, it's either I heard a bell, I didn't hear the bell ring, the game was over, and I stayed too late, or it's compelling. But here's the thing, Tom. I would have told you that 3 or 6 months ago, the same thing. It's only gotten more that way. So can it get even more? I guess so. But there comes a point when you pull so much and so hard that everything snaps. For me, it looks like the way it's going to snap is we have to get gold to a new high and stay there. Then the mainstream media will talk about it more than 2 minutes in a month. It will bring it doesn't need that much new blood. The problem is what's left is old blood. It's people that have, like me and others, that have been in it. We own it. We put our lungs in it. There's not much more to go. That's why the volume is very low. You'll see a stock have great news, go up 10 cents on a million shares, and the next day lose the 10 cents on 50,000 shares. The other problem is the illiquidity, which is keen in the junior resource market.
So you're saying we need to basically break above that, 2086 level and stay there for a bit to attract new capital and energy into the space.
Yeah, Tom, I would suspect, and I've gotten a little bit back because I started this year working with companies as blog sponsors. So I put my foot more than my toe back in the junior resource market after almost 10 years. And I would say, despite overall wealth increasing over 10 years, there's more money because markets and values of things went up. We probably still have the same amount of institutional interest or even less. We still have about the same amount of people that were, speakers. Some newsletter people disappeared or passed on. New ones have taken their place. The piece of the pie that made up the junior market, if it was this small, it might even shrunk even to microscope. So it only needs a little bit of change, a little bit of freshness to really turn it around. And then those valuations will suddenly be realized as how compelling they are. But like I told you earlier, I would have thought 3 or 6 months ago that turn would have come. Turn is coming. It just, like a lot of things, sometimes takes longer than any of us suspect.
Mm-hmm. Do you think there's also, regulatory issues that are standing in the way of that, Peter?
Absolutely. Well, the first biggest thing is what's changed, Tom, is there's just not 10 years or 20 years ago, there were thousands of financial advisors in Canada and the US who built a book of business around commission-driven buying and selling of individual stocks. And a lot of them specialized in resources. That's a dinosaur. Not to say that there's none left, but there's very few left. So that junior who used to just find one of those people to like their company, who then got 100 to 300 of their clients to buy the stock, that's gone. Now they have to get to those same end users, if they still exist, almost on a case-by-case basis, or find an alternative source where they may or may not be, which is social media and what have you. But the regulatory is what really killed it. Here in the US, they don't even care if it's an OTC symbol. If it's not trading on the NASDAQ or the New York, firms are not letting the financial advisors buy them even unsolicited, and some of the discount brokers aren't letting you execute that trade anymore. So and then the last on the regulatory is, and this is the hardest thing, and I understand why it went into overkill, because 20 or 30 years ago, people were saying things that shouldn't have been said. But now they made it so difficult that you can't have any sizzle if you're a junior company. Well, that's all a junior company has. It has a lot of hope and projections and all. And basically, their hands are tied on how they can promote and what they can say and who they can use and all. So all these things combined, plus what we just discussed earlier, made that the toughest market I've ever seen in 40 years.
So, Peter, you mentioned cryptocurrencies earlier. Do you feel like that's a crowded boat trade at this time too, or is that, you know, realistically considering where that market is price wise, does that have room to go back up?
So I used a video from a young man that made it's I think the single best thing that has described what has happened in the cryptocurrency world. I think even though a lot of people got wiped out, a lot of money was lost. A lot of people are hoping, especially stars and celebrities and financial people, hope they never or they somebody destroyed or will never be able to see what they were saying just a year or two ago about cryptocurrencies in general. But for the people that remain, the financial networks and the financial media still give them too much time, given how basically wrong they've been at the upper end where most people got involved. And, the clearly person, and I'll say the name because I've said it publicly, the huckster of the 21st century is Michael Saylor. I mean, to tell people for several years to sell everything you own, borrow if you have, to sell your home, and not only put it across cryptocurrencies, just put it in one. And at the same time, say something that for 2,000 years has preserved people's wealth is totally useless gold. And yet the man is still appearing and without no brought up to him, well, what about the fact that you said this and look what happened? So cryptocurrencies is still a crowded trade, even though it's down because there's still too much emphasis on it when gold is not getting its justifiable day in the sun. And that's, again, going back to the uncrowded boat and the contrarian play, why I still like it.
Mhm. What do you think is the biggest threat to Bitcoin and cryptos in general right now? Is it the uncertainty around the regulations of how different governments are going to be handling it going forward around the world?
What always kept me out of it, and finally to say enough is enough when it hit its high, it's not to the government's advantages, the people that run governments, to have the Bitcoins of the world. They want to get their fair share of every dollar they can, and they don't want dollars to go through it or into something. That's why they want to bring these currencies in themselves, because they, in a sense, will then be able to control and make it almost impossible for money to be hidden that can transpire or without them getting a take on it. And since most of these countries are becoming more debt burdened, they have to find more and more ways to raise money. That's the main reason that you're hearing them speak out about Bitcoin and so forth and so on. Not because so much of the mechanics, but the fact that they can't get their fair share of taxes on it. Trust me, if there was a way that they could tax it and get 20 or 30 or 40%, they'd all be wearing Bitcoin hats.
But if you declare it as a capital gain, don't you have to pay the taxes on that anyway? No,
Yeah, but what I'm talking about is the many people that are actually using it to not be
to
seen by
transact
the
with.
government and to transact and all. And then let's be clear about it. A lot of the things that have gone wrong, all the threats and things that people have used using cryptocurrencies to hide that. Plus, a lot of the cryptocurrency market, people don't want to talk about it, but a lot of the money from the drug money went into those cryptos, and that's how they were able to sell because everybody here was taking hard dollars or fresh dollars to buy this stuff, and they were part of the sellers into this. Listen, there will be a survivor, that there'll be survivors, but what was talked about just 2 years ago as the whole new world and everything that you knew about gold and regular finance is going to be gone and everybody's going to be in Bitcoin, that's gone. Will it still be around as a speculative play and have a portion of interest by people? Yes, but we knew, I always knew it was dead because it just couldn't transact in the way that money needs to transact. But just like anything else, and it was shown, remember, everybody forgets the NFTs and people were paying millions of dollars for real estate online and all this other stuff. All that blew up. That is not coming back.
Mhm. You mentioned kind of Bitcoin and gold in the same context there. Do you think that Bitcoin took away and cryptos in general took away some of the momentum that would have normally flowed into gold as a safe haven and in some ways an alternative currency than normal, let's say US or whatever fiat currency that people are using.
Absolutely, Tom. First, it started with the cannabis, then it really grew with the cryptocurrency.
Mhm.
You can be certain, in my view, if we can go through that movie Family Man, where you get to see an alternative what life would have been like, you would have seen that if there wasn't those cryptocurrencies, some of that money would have found itself into the metals money. And remember, a good part of that money's gone. It's not just down, it's gone. And that is money that might have come in. And it took away. And it also created a think process for young investors by the people who had most to gain by pushing cryptocurrencies. That goal is this horrible, it's your worst enemy. If you eliminate it, cryptocurrency can only go higher. And that's why not only they become cults on cryptocurrency, but they became gold haters. And I always tell everybody, I'm not about to give up on something that worked for a couple of thousand years for something that's only worked for a couple of years. And by the way, if you remember, most of the people that were peering were about 21 and 22, and the toughest economic crisis they had to face was passing algebra class just a few years before. So I wasn't about to buy into them that they know that this is the whole new world. And it'll stay around, but it's not going to be anything close to what was being predicted just a few years ago.
Peter, this $50 a pound level for uranium also seems to be a very important resistance level, just as this $2,000, $1,950 in gold. What do you think we need to break out above that level for uranium?
Well, I have said that Cameco is not only the bellwether for the uranium industry, so how they go, so will the uranium price, and so will a lot of the stocks. Got to keep in mind there's a difference about uranium. There's only a handful of public producers. It's not like there's hundreds of different choices you can make. The only choices you have outside of a few producers are exploration companies. I mean, there's a few developing and going to turn into producers. But Cameco in the last 2 years outlook has just made a 180. And they are just seeing and saying that all systems are go and that the utilities and all are recognizing what's happening and are coming to the market. And what's interesting is we saw a couple of million pounds need to be bought, and we saw a good push up. It's not going to take that much. And now we're seeing new people form new funds to buy uranium. Uh, again, I'm not really worried. I get more concerned when I turn on the internet and see 40 posts of uranium and 39 of them have a rocket ship going up. That to me, I rather get the slow and steady, and the turtle wins the race. And I think all the fundamentals remain solid, if not better. There's no way the world can go forward and have the things that politicians talk about, and nuclear energy isn't a significant part of producing that power in order to have those things.
Mhm. So, Peter, I'd like to drill down a little bit more into how you see the sector at this point. Are you waiting for momentum to come back in? Are you, just looking at the fundamentals and sitting tight on some positions? Are you looking at producers or developers, explorers? How do you see let's say, the investing landscape within the uranium sector?
Well, like I said, Cameco has been and remains would be a core holding. I think there's just no way if you think uranium's going up that you don't make money owning Cameco. I think it's a little bit tougher on the exploration because so many of them are very early in the early stage of exploration. And even with success on the drill side, to get to the point where that'll eventually contribute and become a producer could be so many years that even this cycle could pass by. That's the challenge in that area. But because there's so few overall players, or let's put it this way, there may be a lot of juniors, but their total market capitalization is small. If any money from the so-called mainstream ever came into this industry, like I expect it will with other juniors, then they're going to have their day and all. I don't really worry too much about uranium price. And that's why I tell people if you want to be conservative, just own the few vehicles out there that basically move on the price of uranium.
Mhm.
Your second choice then is the handful of producers, and then the tossing the dice is in the exploration. Some of them have been beaten down. I'll just be biased in this. It's a blog sponsor and I own the stock. But a Kraken Energy that was sold stock at $1, and as one of its financing, and is trading at 25% of that, and all they did is advance where they are. There's a lot of those stories. They're not the only one. When you see things like that, that's the time when you really at least want to take a speculative bet. And you could toss, I think, almost a dart at some of these speculative uranium stocks now that are down 75, 80% from their highs. And I think you can make money because I still say we're going to see a $75 uranium print in the next 12 to 24 months. I really think it's just starting to go now.
Mm-hmm. Peter, I've also heard you say that cash has become an important part of your strategy right now. So has your view on holding cash changed over time, or is it because you see, as we talked about earlier, this maybe worst era ever, not only socially, but also economically and in the markets?
Well, cash has become a little advantageous now. It was in 2021 when I built it up because I felt the market would go down. But now it's competitive. We're looking at anywhere from 6 months to a year of getting 5%. Remember, the stock market going back 100 and something years, including 30 years of almost straight up, only averaged a little over 9%. So if I can get 5% without any risk, it's competitive now. But I always feel that we should own some cash, not only for safety reasons, but there are going to be assets that can be valued. I think the next area where there's two areas that I'm focused on, one more positively than the other. Oil is starting to come back to a level where I think we have to look at it again. When it went over $100, I didn't think we were going to last, and I stopped talking about it. But we're coming back to a level now, and to write it off and think that there's not going to be any need for it and all, I think is a mistake. And shares are finally coming off in that area too, that probably at least need to start watching. The other area, which I think has a lot further to go, so I wouldn't be ready to step up anytime soon, that's the commercial real estate market. We're really starting to see things change there rapidly. We're starting to notice significant major office buildings in major cities being abandoned or sold for a lot less. And that was always the sure thing. You bought real estate and you sold it for a profit. That's gone. Part of the other reason is some of these major cities, people don't want to go work there. The lawlessness that is happening, what have you. But there's a couple of $1 trillion, I forget, in the next 12 or 24 months of commercial real estate loans that are coming due at a time when most banks, not the few major ones, but most banks are really tightening their belts. And the small businesses that I talk to through our planning group, every single one of them says not only is it tougher now than any time before the run-up business, but availability of credit has really gotten tightened. So I would look at oil first, but I think after this swoon that's starting to happen in commercial real estate, there'll be opportunity, but I think we're several months away, if not a year or more away from that.
Mm-hmm. So that's part of, you were saying the banks tightening their belts, that's tightening their lending standards.
Yeah. And some of the people that have outstanding loans, they're going to call them in and not want to reloan it again, or reloan it with a lot more leverage. They're going to want more leverage in order to get that money again. At a time when small businesses are struggling, not only on the lending part, but still with labor shortage. It's an amazing thing how before the COVID, restaurant owners and all didn't have much of a problem getting help. And now across a wide spectrum in the service industry, very difficult, to where restaurants now close a day just so everybody can have a day off, because if they didn't, they all be working 7 days. So it's not as good as the "don't worry, be happy" crowd, Tom, on Wall Street would want to make you. Underneath the handful of people that are doing well, the elite, the top 10%, most people are struggling. 2/3 of America is working paycheck to paycheck. Food bank lines are just getting longer and longer. And the type of people that are getting on those lines are people up and up in terms of income.
Peter, as you're telling me the idea about, banks tightening their lending standards and these commercial loans coming due, this reminds me of the idea that lags always are variable and take time to process through the economy when the Fed makes these rate hikes. So did you think that we could have gotten to 5.25%? And, how sure are you that we pause here, if not reverse?
Well, one thing I can tell you, Tom, after 40 years, I'm not sure of anything what I say or think anymore. I've lost enough. I've been wrong enough times to never think that it's a certainty. But I can tell you this. If you think about how bad the Fed has been and how wrong it's been on the wrong side of things for quite a some time, going back to Janet Yellen while she was there saying, we're never going to have another financial crisis again. Well, she was kind of wrong on that. But think about this. Did they not have the education, at least, or the sense that when they first lowered rates down to zero, that they basically killed the fixed income market, would force all sorts of people into much riskier investments in order to maintain a lifestyle that a lot of people are living above what their actual income is. And then when the turn came and they realized they had inflation, they said, no, it's not as bad as anybody thinks. It's just that word that we're never going to hear a Fed officer, as long as we're alive, ever use again. Transitory. That word is killed. You're out of a job if you say that at the Federal Reserve. And then, of course, where were they thinking that when they raise these rates and they inspect the banks and they're supposed to know what the banks are investing in, that you wouldn't have these issues, that these people would have such paper losses and have issues that can cause what we saw with SVB and some others? At best, they're guilty with an explanation, but more likely they're just plain guilty. Mm-hmm. But what choice do we have? It's them or the highway. But I don't count on anything that they say is as complete candid and all. So my expectation, as you and I speak before this announcement, is we're most likely going to get a 0.25 raise and then a heavy commentary that a pause is most likely to come unless we see news that turns against that. And also, they might just pause. What I don't think we're going to get is a surprise on rates that they're going to keep going higher or talking things are worse. That's the only thing to knock the stock market off. Right now, the don't worry, be happy crowd has put into motion a rally. And the only thing that could kill that is if suddenly there's a view that the Federal Reserve is actually going to tighten and continue to tighten more than anybody expected, or some unknown event around the country. But for me, and what I've urged people is, those who just wish 6 months ago they didn't own all the equities they did, please use this upcoming rally to lighten your load. Don't get reinvested in it.
So, Peter, considering that, the Fed is at this 5.25% headline rate, we might see another 0.25% hike here, if not a pause. Depending on how that plays out here, we'll see shortly. Do you think that the Fed is able to declare, some type of a victory over inflation, or do you think that inflation has yet to rear its ugly head again in a very cyclical manner, as we saw at the end of the 70s?
I think we've seen the worst of inflation for the foreseeable future, because there has been some serious tightening, and the economy in certain segments is a lot weaker. Don't forget also, part of the inflation was the distribution cycle was messed up completely by COVID. And there was a lot of, people still have trouble getting certain products. There's delays and things of that nature. But we've seen a lot of things that would normally, if we were going to have rampant inflation, still be up there, but they're not. Food prices, particularly raw foods like wheat and all, lumber prices have come substantially down. The oil prices dropped dramatically. So I don't think rampant inflation, or that runaway inflation people were predicting 6 to 12 months ago, is coming. But inflation is relative to what it used to be. If you were used to 0 and 1% and it just is 4%, that's a lot higher than what you've grown accustomed to. Remember this much, Tom. People who built and worked on retirement or are retired, who live off fixed income, going from just 0 to 1 to 4% dramatically changes how they can live the rest of their life, because they don't have the ability, unless they go out and get another job again, to make up for the less purchasing power now that they were going to have otherwise. Mm-hmm. And that's not discussed on Wall Street. That's why we don't believe in traditional financial planning, because it never has a plan B. Either plan A works or you're out of luck. But unfortunately, a lot of those people are in for trouble, because we're just going to have a higher inflation rate than we had before. Not as high in the 70s, but substantially higher than just a few years ago.
Excellent, Peter. Well, I think that's a good place to kind of wrap up for today. Do you have anything else you'd like to share with us before we do?
Well, what I've been saying to people such as yourself, and you're deserving of saying, is thank God for services like yours. I've never seen Main Street media be more unjournalistic than it is now, both politically, socially, and economically. And even the major financial networks, they're just one-sided and really they've tied their hips to Main Street, Wall Street. And I think you need to have diverse opinions. So thank God there's people such as yourself doing what they're doing, Tom. I really appreciate being on, just so you know that.
Well, I appreciate your time and sharing your opinion with us as well, Peter. Of course, your blog, all your video links, anything like that, all available at petergrandich.com, right?
Thank you, Tom, and Twitter, of course.
At Peter Grandich, right?
Yes, sir.
Perfect. Thank you so much, Peter.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.